Amazon is taking on some of its Chinese rivals, Schein and PDD's Temu, by taking its low-cost e-commerce service to 14 additional markets. It will call the new app Amazon Bazaar. The low-cost shopping app will ship products to countries in Asia, Africa, and Latin America. Now, shares of the competition in global markets, Mercado Libre, C Limited, and PDD, those are all lower right now, as you can see on this news. Do you really want to bet against Amazon or bet with Amazon? Well, today's countdown closer is a fan of Amazon Web Services. Let's bring in a Blanke Schein Wealth Management CIO, Robert Schein. Robert, so this is interesting, this move and this announcement by Amazon, because of what it's doing to the competition. Nobody knows how to ship things cheaply and procure product better than Amazon when it comes to the low-cost market.
Yeah, we love Amazon just for that reason. The acceleration and innovation story continues. In so many different platitudes, Amazon is going full court press all across, and we're seeing this, down this lane for the retail. They started with retail, they're still leaning into retail, and they're going to continue to dominate on the retail side.
It's interesting, too, because you also like Apple. That is another global story, certainly iPhone production and, the China-U.S. trade war, that certainly has become a piece of the Apple story. But you do like that stock as well. You're still with it.
Yeah, Apple now has, like Amazon, starting to accelerate into the year end. So the stocks are now playing catch up relative to the S&P 500. We just saw both Amazon and Apple report strong earnings. Very impressive. So growth on the top line and the productivity on the bottom line. Apple specifically is maintaining a 47% gross margin. And now we know that the 17 is doing better than expected. So by our value matrix, our discount cash flow model, we still see Apple at a 20% discount as to today's trading, where it is relative to the market.
Oh, that's interesting. Well, that's a pretty big call from you. I want to ask you about something else here. We've talked so much, especially this week, and there's been a lot of pressure on the markets because of concerns about valuation, that this market has just gotten too frothy ahead of itself, especially when it comes to the AI trade. I know that you know what the Buffett indicator is, but according right now to the Buffett indicator, it's one of his favorite rules, that basically it's indicating that the market is overvalued 200%. That is the number that I'm going to give you here right now. Ratio of total market cap divided by GDP. That's a pretty substantial bearish call from someone like Warren Buffett. Do you agree with that?
You're not going to disagree with Warren Buffett, but here, let me say it this way. Yes, valuations are ahead of themselves. That's why we saw the risk-off trade this week take a breather. But I firmly believe that a lot of the valuations are ahead of themselves simply because a lot of the investment managers playing catch up year to date. So they're running into the stocks that have been, continuing to be winners. And so you're seeing that momentum trade build up. It's okay and it's healthy to have a week like this week where we take a breather, and it's really a stock picker's market. And so this is the golden age of that. It's going to continue to be that moving forward. So if you have your book positioned properly, you pick your spots, you have some dry powder like Warren Buffett, and then you jump in onto some opportunities. But yeah, valuation is always a concern. We're nowhere near the valuation. I mean, we're hearing this all the time that it's late 90s. The difference between today and the late 90s, these companies are making money. The free cash flow is substantial. So yeah, not every company, but the large mega cap techs are really going to continue. And you see all the investing that they're doing for the AI innovation story moving forward. They're not spending that money not to have a future ROI. So yes, they're bottom line is they're going to both grow the top and bottom line on all of these companies, and valuation will catch up.
Well, you say that the bull market has got more room to run, but you also say that we're not out of the woods yet. What do you mean?
Yeah, again, you got to be cautiously optimistic. Again, one of the underpinnings right now, we saw the market reverse actually last Wednesday when the Federal Reserve Chairman in his press conference took away the probability that we would have a rate cut in December. And since then, we've been seeing it sort of the risk off trade. I think that was part of his intention as well, because of valuations have gotten ahead of themselves. But we still believe you could have pauses and setbacks. Choose your opportunities, choose the equities that you want, and then you can take that and add to your portfolio or put in some new positions moving forward, because we do believe in the Santa Claus rally will continue between now and year end.
Yeah, well, and I do want to point out to our viewers, we actually just in the last few moments saw the S&P turn higher. NASDAQ is still lower, and the markets are lower for the week. At the same time, the Dow ticked up higher as well. We got this news, the shutdown, there's a new deal coming from Senate Minority Leader Chuck Schumer. And even though we're hearing now, according to some Fox News sources, that the GOP is going to potentially reject the offer, still having that idea that the government could reopen, investors are cheering that. So there is an effect here on the market.
We saw tariffs earlier this year. We're seeing the government shut down right now. All stories are negative headlines, but they do pass over time. It's looking into next year. We have the one big beautiful bill that's going to have $150 billion of tax roll relief for consumers. That's going to accelerate not only these consumer names we discussed today, but the market and the GDP for next year.
Do you worry about fourth quarter GDP? I mean, Kevin Hassett was on Fox Business this morning, and he said, look, GDP for the fourth quarter, it's going to be cut in half if this shutdown doesn't end.
I'm more concerned about earnings, and the S&P earnings just reported a fourth consecutive quarter of double-digit earnings growth. That's what we're paying attention to. That's what market matters most, or what matters most to the market. So I think that's the most important. But yeah, the GDP will take a hit this last quarter. But you know as well as I do that spending continues, and they make up for it.
Yeah, well, certainly, according to the University of Michigan, there is some concerns on the sentiment side. But as you know, what someone says in a survey and how they feel doesn't always equate to what they spend and where they put their money to work. And we'll see how the holidays go for all of us. Great to see you, Robert. Thank you so much for being here. Appreciate it. Well,
Blanke Schein Wealth Management is a group of investment professionals registered with HighTower Services, LLC, member FINRA and SIPC, and with HighTower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through HighTower Securities, LLC. Advisory services are offered through HighTower Advisors, LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analysis, prices, or other information contained in this research is provided as general market commentary. It does not constitute investment advice. Blanke Schein Wealth Management and HighTower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This document was created for informational purposes only. The opinions expressed are solely those of Blanke Schein Wealth Management and do not represent those of HighTower Advisors, LLC, or any of its affiliates.